All right, so let's talk about obviously everybody's the question now that's on everybody's mind is not even is the squeeze over, meaning do we head to new lows? Uh, Actually, there's quite a few questions unanswered. See, and here's what I wanted to talk about with you guys today too. That um, I've been trying to concentrate on myself, the main focus on it, because I think it's important. Um, if you remember a couple of weeks back, we spoke about how everyone gets fixated on if it's the bottom or not, right? And if it is a bottom, it must be some major bottom that will never get tested again, and more importantly, will likely be the start of a whole new bull market, right? And I think that's something we got to try to get away from, because usually in the past you don't need to, especially in corrections, because usually when the correction's over, you found the low. Maybe you'll test it more and more these days. There's no such thing as a test anyway. But usually you might test it, and then it's the start of a whole new bull market. I think there's a good possibility that doesn't necessarily apply this time around, right? One, because we aren't necessarily or haven't been in a correction, right? It's been, I don't care what anybody's definition of a bear market is, it's been a bear market, especially in individual names. They've been bleeding a lot worse and a lot longer than the actual indexes anyway. But it's been a full-fledged bear market. Started off with more speculative names, high growth names, and little by little started to spill in each and every sector, eventually getting, as they say, the generals, the big names, and the indices, right? So I've been a part of bear markets, as you guys know. We spent a lot of time talking about it. One in 2008, another major one when the tech bubble blew up in 2000, where there were instances where there were lows and the bottom was in for a period of time, weeks, months, and a lot of players, by the time that bullish phase was over and done with, assumed that just automatically there would be a start of a whole new bull market. And then obviously it wasn't, right? We had a new leg down, broke the lows, and was just within a larger bear market cycle. That very well could be the case here, right? And honestly, I don't think there's any way to look out, predict, and forecast ahead of time unless you get that full capitulation. And the reason why capitulation is important, again, something else we spoke about, there are no more sellers left, right? So that's why you can make the claim that the lows are in and potentially it's the start of a whole new bull market, right? Because everybody got out, okay? There's no more sellers left. Little by little, those, all those bears convert to buyers, climb the wall of worry, and that's a bull market, okay? We got close in a sense to capitulation. There's been capitulation in certain areas, certain parts of the world, certain markets. Bonds very much look like they saw some capitulation. On the equity side, it's hard to make the argument for capitulation when you got fund flows, money coming into funds on a weekly basis still, okay? And on top of that, and this is something else we spoke about, right? If the bottom is in, okay, it wouldn't take long for retail to get the itch or take the needle, right, and get back in, start rolling the dice on every speculative name and thing under the sun. And lo and behold, we put in a low, we rally for a couple of weeks, and what do we see happen? All right, boom. Here come all the meme stocks, short squeezes, the whole 9 yards. You got an uptick in retail. So it's extremely difficult to make an argument that we got the capitulation that we wanted for the start of a whole new bull market. Okay. So that's that. But like we've gone over, and we went back, if you remember, we looked at some comparisons. Again, it had nothing to do with 2008, nothing to do with the tech bubble, but just to give you guys an idea of what it felt like when a market put in some sort of low and rallied for sometimes, a couple months. And when you look back on a chart, it looks like you would never get that bullish feeling or that itch because, the rally didn't look like much, even though it was for a couple of months, but we're sitting through one right now, potentially, right? And you could see how things can look awful, especially the price action. Everybody could be all bared up, and price action can make you feel and forget everything you were bearish about. All right. And what's likely to happen, and happens often, is you get the reason that low was put in, everybody being bearish and everybody positioning either defensively or for further downside. It gets to the point to where you don't see that anymore. At the least, you start seeing a lot of those shorts get covered. You see more of neutral positioning and sentiment at the least. And that's the job of these bear market sentiment squeezes. Okay. So if we're in one, that's something we were talking about, we wanted to keep an eye on, and we'll go over some of the stuff we were looking at so you guys could see where that stands, right? Where that currently stands. Okay. Even if we are in a bear market and there is further downside, we're going to get these periods, right? And this is one of them where we can hang around. The lows can hold for, again, could be months. It's hard to put a time limit on it, right? Depends. Do you get some sort of big exogenous event or catalyst for further downside, right? Do you get that non-believer crowd, again, that bearish crowd who is stubborn, like we've been seeing, especially the early part of the squeeze, right? Nobody wanted to believe in this rally. Nobody, including a lot of us, for good reason. But the job of these bear market squeezes is to get you to believe. Okay. So the point I'm trying to make is, it's, from my experience, extremely difficult to try to forecast ahead and determine whether we are at a major bottom and the start of a new bull market without certain information. And for me, that information comes through time, right? So I mentioned to you guys on prior webinars that one of the main ingredients to a healthy bull market period, let alone the start of a new bull market phase, right, for me, is new names, new action, new potential leaders, right? And at first, you're reluctant to see it because you're probably still, bearish, right? You don't want to believe, but little by little, you start to see some really solid, aggressive call buying in names that have never seen action before, right? Again, they don't have to be new IPO names. They're just not going to be, in all likelihood, only the Apple, the Tesla, and the Amazons of the world that are just going to catch the action, and that's going to be the start of a new bull market, right? So that's one of the things I'm keeping an eye on, right? We've gone through earnings season, which makes that a little bit more difficult, a lot more difficult. But in all honesty, even with earnings season, for me, the bulk of this squeeze, okay, the bulk of it, not all of it, because I saw somebody mention Apple, and that was actually even performing well before we made lows. It was outperforming, but the bulk of this squeeze, especially recently, has been short covering. And there's nothing wrong with that, okay? Sometimes, there are times new rallies will start off with short covering, all right? Shorts get squeezed, they cover, and you'll see action in the biggest crap out there, okay? But it has no lasting power, okay? If it is the start of a whole new bull market, you're not going to see the whatever names, the Bed Bath and Beyonds of the world, And it's not just even meme stocks. Everybody throws it into one, one category. It's basically every stock that's been shorted, right, for pretty aggressively for the past year and change now. And really, I've never seen anything like it. I've never seen so many stocks go down almost in a straight line, right, 90% off the highs, without a squeeze like this, right? And again, we talked about this in the room several times. I can't believe I couldn't understand how we haven't seen a squeeze like this in these names, at least 2-3 of them already by this point, right? So this is like the first real squeeze where all these shorts feel a little uncomfortable and have to hedge and have to cover. Honestly, I've never seen anything like it. They've been able to sit comfortably in these short positions and just ride it down, right? And if you guys remember, if you think back, for those of you around, that's kind of what we were looking for and hoping for a couple months back as the most bullish case, right? Because things were still in a bearish way, right? Everything, we weren't optimistic at all, but what we were hoping for was at least something like this, where you'll see stocks, off the lows go up 100, some of the best ones, 200-300%. Keep in mind, they're down from $100 to $1, right? So 100, 200, 300% is bullshit, but it's normal behavior. These things happen, okay? So I've been wrong plenty of times, but I thought something like this we'd see at least 2-3 times, at least by now, right? So this is the first real one. And it shouldn't shock any of us that because this is the first real squeeze in a lot of this stuff, it's been pretty violent and strong. I mean, that's expected, right? A lot more shorts, a lot more covering, the more violent the squeeze. So none of that should surprise us or change in how we look at any of this, right? So we're at this point now where the bulk of short covering, right? We still, even today, we're still seeing more and more of this WBR, that Weber, Chris Weber, you saw that stock today. There's still short squeezes out there, okay? So I'm not making the statement that we're completely done with that. There's still some left, but for the most part, the bulk of the short covering, the short squeeze aspect of this rally is closer to done, okay? And what we should see, okay, regardless of if it's the start of a new bull market or, as we've been calling it, this bullish phase within a larger bear market, right? If it still has some juice left, more than likely we're going to see new action, new names, and it should continue to be the case, right? And what happens is when you see the new names and new action dry up, right, that's a warning signal, okay, that buyers are exhausted. They're not looking to put on more risk, right? When you see action in the same bunch of names over and over again, may not be the top right there and then, but you're closer to the end of that up move than the beginning, okay? So the point is, we're getting out of earnings season now, right? The bulk of the short covering aspect of this move is gone. OPEX, monthly OPEX is going to be done tomorrow, okay? We have a clean slate, right? There are not many excuses for any of the order flow left to where we're going to find the truth behind the buyers, right? If there's any real buying coming into this market and individual names, right? So that's what we have to look forward to. Because again, not to take anything away from what we've been seeing, these moves have been crazy, crazy. And if you can take advantage of it, right, regardless, options, equity, you should, and it's worth it. All right. But the one thing you got to be careful about, and that's the thing we all are worried about, is you start building positions here right, in squeeze names that have already squeezed in a significant way, and they're done, right? Because now you could see there's a lot of room from where we are now to those lows, okay? And that's what I mean. There's a lot of room. We could very easily see, okay, very easily. And the market never does what I want it to, but almost ideal scenario would be this rally eventually teeters out, right? It likely has more work to do. Okay, not even in upside, but more work to do in working off some of that bearish positioning out there. So probably has still more to do, but this rally eventually runs its course. We see some selling, the indices and names start to turn lower, and it's a very possible scenario where before we see a legitimate test or break of lows, there could be enough bearishness there. There could even be capitulation there for that to be an ideal entry, you know? And if you guys remember, yeah, this is like, for example, here, right? And unlike most out there, you know, I'm honest. When I don't know, I don't know. And when I'm wrong, I'm wrong. But back here, if you remember, wow, this was it here. That even looked like a better bottom now that I'm looking at it than when I usually do. But right here, this rally, okay, even though in my heart, I didn't believe that this did enough, right, on the downside, okay, but this could have been a legitimate low, right, where these lows could have held for a while, and you see individual names and certain pockets of the market do well that you could take advantage of it as far as upside is concerned, right? I had no idea at the time, okay? You didn't have as much bearish positioning as you did here, but again, because it's a lot lower and you get more bears, right? But you had a lot of things line up here, right? You guys remember the difference in where we finally had to acknowledge that it more than likely is not the start of anything was when we started to come down, right, from here, and there was just no buying. You know what I mean? There was just no new buying. And we started to see put sweeper activity pick up again, and all the things that you would want to see, right, for this to tell us that this low was legit, even if we got to retest it, we didn't see any of it. All right. And that's what I'm saying. This told us nothing. This told us all the bears, right, were caught offside and they got squeezed and squeezed hard. Okay. That's all that rally told us. The truth, all the truth came out in this downdraft. Okay. So we are at a very similar point here in where, again, it doesn't have to be a test of these lows, right? It doesn't have to come all the way down here. But when we finally do see this rally get tested, okay, the stuff we look at as far as sweeper activity, sentiment, positioning, all that stuff is going to tell us a lot about how legit this rally was, or it was just a sentiment squeeze like it was here, just a little bigger, a little more broad as far as action, right? All right, but if you guys, this rally, we've seen, I think, broader, even sweeper activity, not even just participation in the price action, is even the sweeper activity has been broader. We've seen a lot more names, different types of names participate. Here, if you remember, it was only those meme stocks, right, as they call them. Only those heavily shorted names that squeezed here and caught the action. This has been, this has been a little different where there's definitely been some broad participation here. But you got to understand, there's been a lot of shorting, right, as we know, and, a lot more names needed to squeeze. A lot more names needed to squeeze. So well, we gotta see how it plays out, right? And if, like, I give you an example, right? The COVID lows, okay? We had the whole enchilada into the COVID lows. It was a big bang. You had capitulation. You had everything line up. All right. But even though, okay, we never really had a, oh, come on, a retest per se, right? And this is different because like a correction. All right. All these dips, and if you could think back, you remember it pretty well. All these little dips that look like nothing on this chart, okay? Everybody and their mother thought was the start of a new leg lower. Everybody, right? You guys probably remember it. Every time the market had a down day off the COVID lows, people thought Armageddon was coming, right? So we didn't have, we don't have the non-believer crowd. We didn't have it. There you had everybody who didn't believe in the rally the whole way. They came in late, right? And that's what we're going to see if that's the case here, okay? The more stubborn bulls are, right? So what I'm saying is this: you get a little selling here, and hedge funds get aggressively short, CTAs get aggressively short, riffraff specs get aggressively short again, Sharpies take the other side and get long again. Then the likelihood that we're going, south, a new leg lower, is unlikely. You understand what I'm saying? If you got that non-believer crowd still aggressive on the short side, trying to catch that down move, these lows are going to hold for as long as they have to. So that's what we got to keep an eye out for as days go on here. Yeah, exactly. The non-believer crowd is fuel, is ammo to bull markets. Okay, you always hear the term "climb the wall of worry," right? They're the gasoline that keeps the fire lit. At extremes though, at extremes. Because just like here, okay, the market gods don't like to pay the crowd, especially on the downside, especially when they're betting on downside, right? The rare occasion that they do get paid is when something blows up. You know what I mean? When something gets, I'm talking about like 2008 scenarios, exogenous events. Right. So you had basically the financial system on the brink of collapse back then. And, sure, the last thing, markets had no control over whether, who gets paid on the downside or not. The housing market got killed, credit markets got killed, equity got killed, everything got killed. So if you get those liquidation events, exogenous event type events, obviously that's a different story. But even in bear markets, throughout the tech bubble collapse, you get periods of time where everybody gets bearish, and it's almost like a pause. Sometimes the rallies are more violent than others. Sometimes they just, you chop around, but usually it's to wear off a lot of the position. And this is all, we went over all this stuff. So the most important thing that we're looking for here, right, is when there are down days, okay, when there's a breather, what does everything look like? You understand? What does the flow look like? What does sentiment look like? What's the noise around us look like? And the good thing is, there's going to be negative news out there. There's got to be. You understand? There's going to be periods where the economy, we get economic numbers and they look like shit because of the Fed tightening, right? Or inflationary numbers that are too high, and everybody, like, here's an example, right? You get Jackson Hole coming up, okay? You got Jackson Hole coming up. Here's an example. Everybody, all of us, everybody knows that Powell has to do one thing, and that's get hawkish and talk these markets down. Okay? After what's happened here, after financial conditions have eased the way they have, right? Jackson Hole, everybody's expecting Powell, just like we've seen some Fed members come out recently and talk down markets. Okay. The more important thing that we need to pay attention to is not what Powell says. Right? I mean, it's important to hear what he says, but how the market reacts, how the flow reacts to what he says. You know, you understand what I'm saying? If financial conditions don't aggressively tighten, or if Powell being super hawkish when he needs to be, then obviously the market, right, the price action is telling us something different, just like we're seeing now. All right? Like, this could have just been a squeeze off sentiment, right? And a lot of us were wondering, like, when we saw Sharpies get all in the way they did, okay, it could have been just off sentiment itself, and they were positioning for a squeeze, right? They took off hedges, they got long for a squeeze, right? Because sentiment was just, and positioning was just that dire. It was ridiculous, all right? But you see what happened here, right? A lot more stuff happened behind the scenes during this squeeze, right? You had one of the most aggressive easing of financial conditions that we've seen in years, right? In years. And now you got all these Fed members coming out and trying to talk down the market with some rhetoric. But, you know, behind the scenes, we're seeing something different. And in the Fed minutes yesterday, we found out, right, exactly what we've been seeing. They were concerned that they were overdoing it. Right, Kashkari's a hawk all of a sudden. You know, he's a hawk all of a sudden. But behind the scenes, remember I told you the chatter, right? We were talking conspiracy theories. The chatter was Powell looked the devil in his eyes. Remember we were talking about that? How, you know, he shit his pants. He saw something that scared the daylights out of him, that he was tightening too aggressively. That happened to be true. That happened to be true. All right. And you don't understand financial conditions, the Fed, their actions, their rhetoric, their talk, that's what control financial conditions. You know, so if the market, and that's the truth factor, the market, right? Price action. If the markets don't believe it, or the markets have a different interpretation, right? There's something wrong. There's something different there. You understand? So that's a point I'm trying to make. Jackson Hole, okay? Everybody's expecting a hawkish Powell and expecting financial conditions to tighten, okay? Which AKA means risk assets, equity prices should find trouble, right? And head lower, okay? If we don't see financial conditions tighten, there's something going on that we need to pay attention to, you know? And on top of all that, I think that I'd be shocked if we don't see the flow sniff that out as well, if we're seeing that. You know, there's going to be buying. It's just, again, a matter of, do we like what they're buying or not? That's right. Because we've been seeing some legit buying out there. Right? We could talk about those names. There's been some legit buying. It's just been in a sea of crap short squeezes as well. You know, right? We talked about BTU and right. There's been some stock picking out there. All right. So that could continue. That could continue. But again, I just want you guys to understand. And I know, you know, a lot of people don't like it and they rather listen to somebody who pretends they can predict and forecast. And I'm telling you, I'm not even trying to do that because I can't. Okay, that's why. But the truth, we're going to get the truth sooner than later here. We're going to see the truth. Okay. And it doesn't necessarily mean the price action. I'm not talking about the price action. Okay. The market could go up, down, sideways, crooked. The price action has nothing to do with it. All right. It'll be even better if we see the price action head lower and we don't see financial conditions aggressively tightening and we see buying into it. That would be best case scenario for us. Okay, so it's got nothing to do with the price action. But what happens around that price action, like I just mentioned to you, fundamentals haven't meant anything for, oh, you're talking amongst yourselves. So you guys understand what I'm saying here, right? So let's quickly get everybody updated here to where we're at right now, okay? So you guys get an idea where we're at. Whatever. Okay. This is, oh, look at that. It came right up for me. I didn't even have that up. Okay. No, is this it? Yeah, right. Let me just reset it just in case. Yeah, that's it. All right. So you guys know this chart well. This doesn't look like the one I posted, is it? Yeah, it is. Okay. You guys know this chart well. We've been looking at it religiously. Right. And what's been going on here, right? No coinky dink. It's translated into the inverse of that. Almost identical. Almost identical. Okay. And if you guys want to know again what this means, really means, this is credit spreads. Okay. The tighter they get, the healthier companies are, right? The wider they get, the higher the probability of default is within companies. Okay. And we've had this from the beginning of the year. Credit spreads have been widening out and we've been in a bear market downtrend, right? And every time we get a little bit of a pause, it opened up a nice little window for a decent squeeze, but quick, right? For a week, and that's it. Here, you can see you got a nice little downtrend, and it's resulted in this lengthier squeeze to the upside. Okay, so and this is what I'm talking about, like when I refer to financial conditions. I guess I use that to cover everything, and I shouldn't. But if we see selling and we start to see credit spreads start to blow out again, okay, that could be a heads up that we got some issues. Okay, we got some issues. We might be headed back to what we've been through the whole entire year. All right. But if we get some weakness and credit spreads just hang around here, or God forbid even continue this downtrend, okay, that's telling us a different story to what we're hearing and reading about on a day-to-day basis. All right. So again, very simply, we start to see, if we see weakness and we start to see this happen from here, right? We know to get out of the way, and that's not a dip we want to buy, right? But if we see these are relatively in check, and you know, again, we're not obviously just playing solely off these things. Like, think about the logic here, right? If this is in check and we get some weakness and we see some sweeper activity coming into that weakness, that's what we're looking for. Okay. And we should, right? We should see sweeper activity is what I'm saying, if they're in check. All right. So again, this has been a big part of the strength behind the and the lasting power behind this rally. Let's see. Huh? This is not updated, is it? No, I had a new one. I just posted a new one. Where is it? Anyway, what's today's date? The 18th, right? I posted one. Where is it? I must have reworded it wrong. Oh, yeah, I wrote up a little description. We're right here now. We're literally right at the zero. Okay, so hedge funds have covered their shorts again as a whole. Okay, they've covered their shorts, right? We've heard that from Goldman, we've heard that from Morgan Stanley, JP Morgan. JP Morgan had a nice write-up, by the way, guys. If you're members, check the likes on private Twitter or the market updates in the room. This morning, they had a nice write-up on positioning, basically explaining in a lot better way what we've been talking about of where we're at right now. Okay, I should pull that up. I'll pull that up a second. Hold on. All right, so what this is telling us here, hedge funds have covered their shorts. We've seen it in the price action, pretty obvious. But they're not aggressively long. Okay, they're back to pretty much flat. Okay, they're flat. So this is where am I? Oh, I should just show you guys this because this I think here it is. Okay, so here they talk about what they were pretty much saying when before the squeeze happened, in a sense, right? Hedge funds were aggressively short. They started covering, right? Now the covering is getting quite extreme. They're talking more of the rate of covering, but we're already seeing as a whole, hedge funds are pretty much flat now. They are not trying to chase longs yet, right? So they, in a sense, they've covered shorts, but they're not flipping and getting long like we've seen them in bull markets, right? We've seen them. You guys know in bull markets, if hedge funds are where they're at right now, we still want to buy every little dip, right? If we're in a healthy market seeing flow, we want to buy every dip where hedge funds are at now. But in a bear market, it's a different story. Okay, they're not chasing longs yet, so they don't have that drive to get long, like they're missing out. Okay. This would suggest few investors find the market fundamentally attractive. Makes sense, right? There hasn't been fundamentals behind this rally. It's been mostly just sentiment and positioning squeeze. Okay. Our tactical positioning monitor, blah, blah, blah. Where's the part? I wanted to show you where they say we're at now. Oh, it's right here. Okay. Given positioning is still relatively low overall, and a few have been willing to chase the rally, historical data would suggest the market can keep moving higher over the next few weeks to months, absent a meaningful negative catalyst, like we were talking about earlier. Okay. However, it wouldn't surprise us to see some choppiness given how extreme the short covering has been, and our view that it's unlikely to be sustained at this magnitude for a prolonged period of time. Okay, so that's pretty much what we were talking about. Okay, you had a lot of the shorts cover fed into the rally here, but again, you don't have everybody bulled up, right, to suggest that this rally needs to roll over now, or right, and we're going to test lows. What you're more likely to see, because of how extreme bearish positioning was down here, is more of what we were calling this bullish phase, right? So more of like a sticky price action up or down to convert some more of those bears to either neutral or bulls, right? So that's what we're going to start to see. And again, that it could translate into further upside. Just again, it's not going to be that aggressive short covering push to the upside like we've been seeing. It's going to be more of a sticky sort of push to the upside, right? But either way, you still have enough sentiment there where this bullish cycle is not necessarily over. Okay. And you see, they think it can last months based off what went into this low. And that makes total sense. That makes total sense. So again, going back to names, guys, here, and I'm being dead straight with you, even prior to here, okay, this is where we want to start focusing on names, right? Because, as far as potential upside on the indices, it's tough. Even if it's a sticky grind higher, that's not a comfortable ride, right? So you can tactically buy pullbacks and sell quick rips if you want to be really tactical with on the index level, but even more so, exactly, HC hit the nail on the head, underbelly, right? So while the market does that up, down, sticky, choppy grind in either direction, under the hood, there are individual names that are performing a lot better, a lot smoother of a ride, and we're already starting to see that. Some commodity names have really looked good, outperformed over the last few days. Energy names, we're starting to see that. So that's what we want to look for. And again, it could be spec action. We just got to realize, it's spec action and we're just trading it. But if we start to see some real accumulation in names, that could be a really promising sign, big picture wise. So that's what we're going to keep an eye out for. What? You're talking about this? Yeah. I know trend lines. Oh, Dom. 1 second before, I don't want to get, guys, like the Drunken Miller episode, a couple at the lows. I got to do it again. You told me to draw trend lines on this guy, right? So this, you still wouldn't buy it? Or wait, now would you buy it? This is what the technical guys I got a kick out of. Yeah, but wait. We were talking here, you told me it was the ugliest chart you ever seen in your life. Would you buy it now is my question. I think I stumped him. What do you do now? So so you still don't buy it? You're going to wait till here? You missed the trade already. We were talking here with the risk reversal. So you missed the trade already, but you're telling me you still wouldn't buy. You're going to buy it up here? You're going to wait for that? But those are breakout plays, right? I mean, that's what they do. I mean, do breakouts still work? I thought breakouts were dead. They still work, right? I thought like false breakouts are the best trade. Breakouts are back in vogue again. Breakouts trade. I haven't, honestly, when I got into the game, breakouts were the biggest thing on the face of the earth. Everybody wouldn't. It was all about breakouts. But then I never seen anything like it. False breakouts. Is that the term? Yeah, false breakouts or breakdowns were the trade because it would lure all the riffraff into the breakout, and then you short it, and they all got caught, and you had more gusto. You know what I mean? So false breakout and breakdowns were the trade to look for. But maybe breakouts are back in vogue again. I don't know. Or maybe it's just some wishy-washy now, mixed up. Anyway, no, Dom has a point on, this is, and not only that, Dom, this is, you got a couple of things. Technical, you have the 200-day too here, right? I think, isn't the 200-day average right here? So you have, obviously some resistance here, technically. Okay, but that's even better. That's what we want, right? That's what I'm saying. On the index level, it's a little tricky here. It's gonna be, I I would just focus on names. Now, intraday, you can trade, the indexes if you're day trading. I'm talking about, if you're looking overnight stuff, I don't think it's worth it at all. I think, I think you want to see some resistance of Dom's technicals here, right? And like I said, like HC hit the nail on the head under the underbelly for the time being. All right. So JP Morgan did a better job than I was explaining anyhow, where we're at positioning wise. Here's another this is from today. Okay. Now every house has different CTA models. This is TDs. I like TDs. But McElliott has one, JP Morgan, Goldman. These guys are still a bit short. Supposedly, though, this is where they may pause for a bit. Okay. But you can see the last time we seen them flip long. They actually got to long before the markets ended up tipping over. Right. So again, you may get that bid, right, creating that sticky action of where they still need to do a little more buying. It's not a lot. It's not a lot. Not the big money we were seeing as far as buying is concerned. All right. One more thing I want to show you guys that you look at sentiment-wise, because I want to get to a few names just to go over what we're seeing too. If I don't find it right away, forget it. Oh, here it is. All right, so this is the last update. And this is the movement on the indicators here. We're right here. So a little bit of a move. All right, you got, look, this. Oh, there's another thing I got to show you. This is still on bull bear indicator, still on 0. Trust me, take my word for it. And these guys are still adding. I'm dying to see tomorrow. I can't wait to see tomorrow. Okay, these are Sharpies. All right. Look how aggressive this move has been. Jesus Christ. But, okay, like this is impressive. Okay, obviously, we all agree on it. I think what's even crazier, and the reason why they got so, look at this. This is the riffraff spec. Look at this. They're going through the bottom of my computer screen. You know? So, like, for example, we get tomorrow's update, and this is like this or even lower. This is not done. There's no way this is done. You know what I mean? There's no way this is done, this rally. Yeah, exactly. Honestly, Robert, I think this had a lot to do with it. But now that after the Fed minutes and hearing what we heard out of it, I think now, I think they had something up their sleeve too, the rat bastards. Listen, think about this, Rob, and honestly, all you out there who, especially members, okay, rewind to the lows, okay? Bull bear indicator 0, Sharpies buy signal, riffraff buy signal, hedge fund short, all of that, okay? We know that already. If I told you, okay, that financial conditions, right, and credit default swaps, think about all that we look at, okay, would ease into the squeeze, all of us, all of you would have robbed the bank to get long, right? If you had that information, you had nothing, there was nothing to worry about. That was the biggest, that was the concern, right? That was the only concern. that you might get a rally for a couple days, a week, right? And if financial conditions tightened, right? We were talking about the Fed selling calls, remember? The rally would cap and you'd be stuck in shock. Like that was the biggest, that was the hurdle for us. The upside. Remember the risk reward? We were trying to figure it out. We had no idea. Even though so I give you guys credit, right? Like even Hartnett, he talked about hitting the nail, hitting the cover off the ball. Hartnett not only gave you the low, gave you the squeeze confirmation a little bit higher, he gave you the levels here. He gave you the levels. Right? He gave you the levels. Start selling up over 3,200, and then the 200-day, clean it out. Unbelievable. But you know, this was so important. The financial conditions. You kidding me? And think about this, okay? If you told us, right? What? Oh, if you told us that not only financial conditions wouldn't tighten, okay? Not only would they wouldn't tighten, they would ease at the most aggressive pace since 2009 or some shit. I mean, come on. You know? That's why, Rob, I think on top of the specs being short for the reasoning behind the Sharpies all in, they had something up their sleeve. They had to have something up their sleeve. You understand? We would never know that. We would never, how could we, nobody could guess that. How could we guess that? You know, and listen, there was some chatter out there, you know, that again, the Fed looked Satan in the eyes. That's what it was being called, you know, that they were getting scared. They tightened too much. But, you know, now we're hearing about it after the fact. It's always like that. But if you told us this was going to happen, I mean, you forget it, you know. They always know. And here's the thing, right? And I could really be, what's the word? I could really be pissed off at Sharpies right now, me. And they're my close buddies for a long time, okay? They've treated me well over my whole career. But I could be really pissed off at them right now, okay? Because that's what I thought they had here, right? You remember? I thought that they might have something up their sleeve here because here, I couldn't find one reason to be bullish after this squeeze. Not one reason. But I thought Sharpies may have something up their sleeve. But you see the difference here and then, obviously, big difference. One, you guys remember it too, they were covering their hedges into the rally. Remember? Into the rally, on the way up. And this time, see, I'm talking about this particular spot here. Okay, it came into the squeeze. So they were super hedged and they covered as exactly, it was so fast. Okay. And then you see this? You see this little dip here, right? If Sharpies were for real about that position, they would have slapped their longs back on into the first dip. They didn't. You understand? They hung out down here and they did it now into these lows. And they stepped on the gas throughout. So that's the thing we have to keep an eye on. And those of you around for COVID, remember, they're going to tell us a lot. They're going to tell us a lot because when we finally do get weakness, right? It's okay that they start taking some off, but if they ever flip it back on, you know it's for real. Yeah, look, it looks like peanuts now, right? Look at this. This was off the COVID lows. You see how it hung out up there? It took a nap up there. all the way to the election. Okay, remember, this is weeks, not days. So they were fully hedged, and then into the lows, they got long and stayed long. This is just, this is crazy. This is craziness. Yeah. What do you mean? Oh, higher levels than this? No. But Eric, this was their biggest hedge net short position ever. This. You know what I mean? Yeah, this, I'll tell you this, I think this is even more telling, because you got, this is what we talk about, the non-believer, right? That non-believer crowd. This is what that means. You get a market rally and they don't believe it. They're adding shorts. You know, that's a disaster for them. I'd be shocked if we don't see them cover this week. I'd be shocked. I really would. I don't think they want more pain. Yeah, it's more. Yeah, Lourdes, I kid you not, okay? Because I've seen bear markets, I've seen bears make money. Without a doubt, they're in bear markets. The problem is in bull markets, stubborn bears get killed. In bear markets, they eat. This one's been a tough one. This one's been a tough one for bears. You know what I mean? This has not been easy at all. Not at all. So you're right. Longs, shorts, they've tattooed everybody, right? They've tattooed everybody here. They tattooed everybody. But let's see. Again, my gut, which means nothing, right? It's based off what I see right now. And in this game, that means nothing. I don't think this rally's real yet. Okay. I don't think this rally's real yet. I don't think necessarily we have to make new lows, you know, in the near-term future, right? I think we can hold lows and even trade higher, you know, but more of a range-bound market than anything else. In other words, what I'm saying is, I don't think this is the start of a whole new bull market to new highs, okay? But I could be totally wrong, You know, I could be totally wrong. And if I am wrong, trust me, I'm not just for pride going to say, oh, my gut, it was right. My gut's still right. You know, if I see sweepers tattooing things and I see Sharpies staying all in and they're buying dips, I don't care what it looks like out there. I will, you know, my tune will change completely. Yeah, the problem, again, for me to believe that this is the start of a new bull run, right? I gotta see new names, new actions. I gotta see it. Otherwise, again, like, I don't know where it tops out, you know? I don't know when we go test new lows. That timing is really difficult. But what I'm saying is that, you know, we're more of in a range type market than a whole new bull market. Yeah, and that's what we may see. Like, listen, Kalanovich has come out, and that's his call, you know, and I could definitely see it happening. That's where we're seeing the best action, the cleanest action in commodity and energy names. No doubt about it. All right? Later, T. Yeah, me too, T. Should be a good one. Oh, speaking of which, let's look at that quickly, okay? I don't know if all you got a chance to see it. In my opinion, this is what got the rally lit, right? This is what not started the rally. This is what lit the fuse. What? Oh. when this came out, I hate Twitter search. I hate it so much. I was hoping the last one would be out from last month that I could show you guys too, just the title, but it's too good. They never Twitter, never. The last month that lit the rally, that got the rally really hot, was So Bearish. What was the title again? You guys remember it better than I do. So Bearish, it's bullish. Of last month, that was it, right? Yeah. So this one is titled Bulls Wanted. So basically, he's making the point that it's not apocalyptic bearish as it was last month. Okay, that marked the lows, but you need more bulls before this rally is over. Okay, so that's where HeartNet's at off the fund manager survey. Okay, and you know, you got some bounces there in some of these things. Like you look at the charts, like look at some of these things were just, they broke through the concrete floor. Crazy levels. Now, this is a survey of fund managers. And believe it or not, the professional side has been even more bearish than the retail side. You know, the retail side even hasn't even been that bearish. But the pros were all bared up, and they all got caught. All right. So a quick summary of this was just that it's not as bearish extreme as it was a month ago, but it's still not bullish enough for this bullish phase to be over with. Yeah. That's good. I like to see them get run over anyway. But again, it's when the crowd is on the same side. That's the problem with anything in this game. You understand? It's not saying that every fund manager doesn't have a clue. It's not saying every hedge fund manager is a fade, right? We know that's not the case. You got guys like Tepper, Druckenmiller, they're icons, okay? But when all of them, when all of them are consensus on the same side, that's where the opportunity is. All right. So let's look at some names, because I wanted to make sure I get to names and just give you guys an idea, because today I think was a good example of what we are seeing more and more of. This was yesterday. Okay. So you could see it's selective, very selective, right? You got an energy name that has been tattooed, right? They love this name. They've been buying this name on dips all year, SU. Okay. There's been accumulation there. Now, again, this is not necessarily a new name, right? But compared to the flow we've been seeing, you're talking about big time action. Okay. Here's the pull, and you got your first breather. They started buying this name back here, and there's been buying ever since. And Elliott too involved. All right. So there's been accumulation in this name. Pinterest caught some action. SNY, we've seen a couple of defensive pharma names. Merck, right, which had a little giddy up of recent, had a nice bet not too long ago. So this SNY got slaughtered yesterday, and they were buying into blood. So this is something to keep an eye on to see if they continue to add. No, I haven't done anything yet, swing-wise, nothing. What else we got? Crowd Leaps. You know, you probably want to see more of that. This was a new name. Keep an eye on for further action. This is yesterday's action, MYOV. This has a nice one. Another medical name, right? MYOV. All right, where's today's action? That's what I was trying to get at. All right, so look at the like different type of names on here. IoT. Anybody know this name? This is what I want to ask you guys today when I get on. Anybody knows what this thing is? Anybody hear of this? What is this? What, you guys know it? Tech? What kind of tech? Is it any software? What is it? IoT. Data processing. Yeah? Let's see what he says here. He gave me a description. It's develops internet connected sensor systems. Wireless connectivity, cloud hosted software. Are they profitable? Not yet. All right. Anyway, you got some real nice action here in IoT. All right. So this is what we saw in BTU a week or two ago, right? They sell the October 15 puts. All right. They take in 300 grand. They take that 300 grand and add another 300 grand to buy the September 17 and a half calls. That's a really bullish combo bet there. I would like it even more if this had more time to it. You know what I mean? More time. Yeah, could be. Could be. But this is interesting action for this name. You know, and this is what I mean by new names, guys. This is what I mean by new names. You know, this is exactly what I mean by new names. And that's the, see, because you know it's clean action. I've never seen action in this name. There's nobody rolling, adjusting positions. Okay. We know that this is not just short hedging, right? This is real buying. So whatever reason, there's a fund out there starting to build a position in IoT. Now, again, the one thing that is missing is more time. I just wish it had more time. Again, even you might be looking to trade it, so you don't even want more time, but just that commitment, you know, that commitment. What is it, a buyout target? Or private act, probably from Bravo in them, right? Yeah, I saw it. Came public not too long ago, right? Oh, the start of the year. Wow, I didn't even know that. I knew it came public not too long ago. Yeah, they're swallowing up opportunities in software. All right. And keep in mind, software is defensive. You know what I mean? Software is not necessarily, even though they're growth stocks, software, a lot of people position in software because it's a defensive tech play. Like software is going to grow even in tough economic times, right? Because people look to cut costs and shit. So it's a defensive play, even though it's tech and they have explosive growth. LNG, you guys have been telling me about this name for a while when we've been talking about energy names. You know, this thing's just a beast. You know, this thing's just a beast. The only thing now, it's, you know, it's a bit stretched here now. You got other energy names that are not as stretched, but, you know, if energy performs, well, what's to say this, you know, doesn't continue to do its thing and go higher? You know what I mean? So, what do I do here? Hold on, let me hang up. Hey, look, who's calling me? But yeah, this is a beast. Okay, if you guys want energy names with decent action, I can give you a really solid list. There's been some really good looking action in energy, not just recently, just in general, the whole year. They've been buying dips. Here's BTU again. They did some adding. There was a little bit of rolling, it looked like. I'll check open interest tomorrow. But yeah, again, you don't want to necessarily chase here now. You know, if you still interested in it and didn't buy it yet, what you want to do is you hope Dom's right and there's a little bit of a pause here and then does that. You know what I mean? But this looks good. There's been a lot of buying in this thing. Dom's gonna say that until the stock's at 35, and then Dom is gonna be like, nah, now it looks good. And you guys will be selling it to him. Dom, you got to understand the logic with sweeper activities, with using sweeper activity. Okay, let me explain it to you quickly. All right, very quickly, so maybe you understand. okay, you see a downtrend, right? And you see me talking about the stock off action here. Now, not only are you not interested in this, which is a trade, okay, you might be looking bigger picture, right? You're looking for bigger moves than that. You're a big shot. I'm just kidding. But you know what I mean, right? You're looking for bigger moves than that. The logic is based off the action of the smarter money that knows a lot more than you and I, that couldn't give a shit about a line I just drew on the chart, okay, is aggressively buying this stock here. So now, what are the odds, right? Before I even tell you about the flow, what are the odds of this stock breaking out or breaking down that you don't like? What would you put the odds here? 50-50? All right, 50-50 shot. Okay. But based off the positioning we've seen come in, bull risk reversal, aggressive sweeper activity, right? The smart money positioning for upside in the name. What do you think the odds are now that the stock breaks this downtrend? That's the edge in sweeper activity. So with sweeper activity, you want to buy pre-breakout, not after the breakout. Do you understand? You want to get in before the players that are chasing the breakout get in. You can roll, you can sell into it, you could do whatever you want when it breaks out. But your edge is to buy before the move that everybody and their mother sees. That's the edge. You understand? What you're talking about, everybody on this webinar sees. What kind of edge do you have there? What's your edge? You have an edge over me telling me that this was in a downtrend here? No, no fucking kidding. Everybody sees it in a downtrend. What's your edge? You think you're a good technician because you're telling me that this was in a downtrend over here? You're wrong already, though. You're wrong. You were wrong. You understand what I'm telling you? You don't get it. What I'm saying is, over here, when you were telling me that you would pass, okay, off what edge? What edge are you basing it off? The downtrend on a chart that everyone sees, Dom? Everybody has access to the same chart you do. You understand my point? That's the point I'm trying to make. I'm not attacking you, Dom. I'm just making the point. You understand what I'm saying? Right? An edge in this game is you have an edge off the other players in this game. You understand what I'm saying? Right? By looking at a chart and seeing a downtrend, you have no edge. So the likelihood, right? It's like this. It's like if you're betting sports games, okay? If you're betting football games every Sunday, okay, you may get hot one week, you get cold the other week. In all likelihood, if you're lucky, over the long run, you're going to finish around 50%. Okay? No matter what, no matter how good of a football handicapper you think you are, right? With no edge, you're going to finish around 50%. Playing breakouts off a chart, you're going to do the same exact thing. You're going to have some winners, you're going to have some losers, right? And you may make a little money, you may lose a little money. You have no edge, though. You understand? You have no edge. I can't win. Dom, you're missing my point, Dom. You're missing my point. So from what you're telling me is you just got to buy breakouts and that's it in this game. 10 seconds, you look at the chart and that's it. That's it? That's all you got to do in this game and you're going to make money? That easy? Is it really that easy? Is that what you're trying to tell me? Honestly. Anyway, the rest of you understand what I'm saying, right? Okay. I'm not saying technicals don't play a part. I'm saying it's worth using technicals. Technicals are very useful. Okay. But I'm saying your edge, okay, your edge off the sweeper activity and the positioning using those technicals is to get in before the move. That's all. I think it's a good thing you look at technicals. Okay. I think it's a great thing you look at technicals. All right. But I'm saying your edge, if you're utilizing the flow, is that flow being confirmation to your technicals. Okay. You see a dip into strong support or a Fibonacci retracement level. Okay. Your edge is if you see aggressive buying come into that support. You understand? And the reason being is if it was a 50-50 chance based off what you're seeing, that support level, okay, 50-50 chance that that support level holds, you probably bump your odds at least 60-40 now off positioning. That's your edge. That's your edge. You understand? That's your edge. Because everything else, okay, everything else that everybody could see, everybody sees the same shit we're all looking at. Right? You see how many charts are on Twitter? You see how many charts get posted on Twitter? Plus 120, right? But that's all I'm telling you guys, right? Sweeper activity position, it's not a crystal ball. You're not going to hit at a 98% clip. It's not happening. It's not happening. But you bump your whatever you're seeing already. If it catches aggressive buying, you bump the odds of whatever you're seeing work that much more, and that's your edge. That simple. So to the point I'm making to Dom, right? If I see this thing here, okay, and you know, it to all of us, it looks like the same thing here. Okay, but if you like the activity that's coming in the name, you like the name, right? Your argument is you're getting in here at the bottom of this consolidation, okay? Either A, for a trade to the top of the uptrend, or possibly an entry and some cushion to ride it longer term for that breakout. You know what I mean? So that's the edge. That's the edge. Period. Nothing else. That's the only argument I'm making. Not that anything else doesn't work or it's technicals are useless. I'm not making that argument. Everybody, you know, looks at different things and they have different uses. Tupperware caught some buying. Here's I mean, they all look like pieces of shit, don't they? What's this? This, oof. Like, look at it. This is a menagerie. I know this Tupperware too. All right, now obviously this hasn't caught the flow BTU has, but if Tupperware catches some more action, right? The action is telling us that players who may know something and a lot more than we do is betting on a breakout of this ugly shit we're looking at, okay? And if you don't think it's possible, it happens. You know what I mean? It happens. That's it, right? For example, what I'm making here, 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 you see sweeper activity here, right? That's an edge. All right, that's the only argument. So again, this is where, see, otherwise, if you you know what happens, right? When players are positioning in things that just look good, when they go from looking good to bad, they get destroyed. You understand? I heard the argument of looking good and buying the breakout in shop every time that thing made a new high. Every time, right? And now the same people who are buying shop up here, okay, now what are they going to tell me? It looks ugly? No fucking kidding, it looks ugly. You know what I mean? No kidding. You're not telling me something I don't know. Shop looks good. No kidding. You know, again, it's just there's no edge in that. There's no edge in that. You know, that's all I'm saying. There's no edge. Right. If you liked it at 1,000, gotta like it at 50. Meanwhile, talk about a crazy stock. Look at this. I didn't even pull up the chart because I was out when this thing caught action. So I saw the action that I missed. I put on the top bet. What is this? Nobody talks about this thing. I never heard this stock ever. What is this? I didn't even know stocks can do this in this market. Great earnings, really? Unbelievable. No, it says electronic technology equipment. Lourdes, I don't know what the hell this. I think I heard the name Clearfield, but I definitely don't remember this stock. But this is nuts. They're doing something right, huh? That's a beauty, Dom says. Dom, you crack me up. Yeah. I know. I looked at it on this screen here. I saw it here, and I see they're profitable too. Damn. But this is this is stretched now. This is stretched, right? Like ideally, right? Look, this is the breather, and any action over here would have been ideal. Up here, I don't know what the fuck they do with this now. Bill, I love that company, Bill. I like that Bill. Man, they beat that up pretty good too. Oh, earnings just now? It must have been good. 179. This is expensive though, huh, Lourdes? This what's it trading at? Like 6,000 PE? I like this name though. This thing was a great stock for us too. Hockey stick. I tell you, the names that are catching the action though is, they're not the names that oh, Flex is another one. This name I know, like this Flex I know this has been around for a while, this Flex. And look at this, you're getting a break out of this disaster. So this is an example, and it's not just one day. It would go on for months of what I was trying to explain to you guys. You get stock picking, okay? And you hear people around you talking about chop, the premium burn, the market, this and that, because the market, the indexes aren't doing much, up, down, sideways, crooked, whatever. But like HC said earlier, the underbelly, under the hood, right? If you're not staring at the index level all day long, you see names like this catch action, and they look a lot better than the disasters out there. And I promise you, it's not a couple days worth. It's not a week worth. Like for me, I miss almost always like the first batch of names, and they're always the biggest winners. You know what I mean? But I always miss the first few names because I'm still suspect. You understand? Like I still need to be convinced that there's legitimate buying going on out there. You know? So I always miss the first few names, but even then, there's a good amount of buying that you still get a piece of the pie, you know? You still get a decent piece of the pie. But this is what I'm explaining to you. Now, again, it's not just, we're finding different sectors a little bit. HC, it's always like that, you know? Always. And I'll give you an example. Net, I actually played your stock that you love, Net, and I sold it too quick because I wasn't a believer. Not in Net, I just wasn't a believer in the flow yet, you know, because it started off kind of like we're seeing right now, you know, very isolated stock picking. And then, you know, that thing just went bananas. But you had other opportunities to buy Net. I'm just a jackass. You know, there were other dips where you could have bought it. Yeah, that's the story of my life, though, Lourdes. That's I try to solve that problem. I can't. I think it's just the way I'm wired. Selling early is a thorn in my side my whole career. I tried a million different things. You know, and not to say it doesn't, the things I tried, they don't work. I just can't put it into action. Yeah, SE, you know, and SE I made some decent money with, but obviously I still sold too early. I mean, everybody sells too early. That's, you know, the only time you don't sell too early is if you put on that investing hat, and you got to do it in a separate account. Okay. Trust me when I tell you, you got to do it in a separate account, that it takes work to get into that account and hit the sell button. That's the only time. The only time. Yeah, you buy it, you like your entry, you know what I mean? You can add to it from time to time, but you got to stay away from that sell button, because trust me, there'll be so many instances where up and down where you're going to want to get out. Yeah, that's the way to do it, Eric. That's the way to do it. Have an account, you stash it, you know what I mean? And, you know, the trick is to not get too crazy size-wise, because that's when you stress it, right? You stress every little dip in it. That's the problem with holding, okay? Even when you sell into strength early, your fear is you want to beat the downdraft. You understand? That's the fear we all have, that we're going to lose those profits. So what I've realized, if I size down, right, and put it in a separate account, I have a tendency to let it go a lot further. You know, because if you size too big, you know, you're concerned about that dip more, you know, so you try to avoid it no matter what you're telling yourself. Well, yeah, GameStop, you don't have to worry about that stuff, so you don't have to worry about that. You just don't ever sell. Ever. No matter what. Even if it goes to zero. Right. What's that? Let me hit a GameStop here. Yeah. Where was the breakout, Dom? 130? Yeah, hockey stick. This is hockey stick. Exactly. This is hockey stick. So are you guys, anybody have been buying some of the commodity or energy names yet? Anybody start dabbling there? SU, that's a great, ExxonMobil. Oh yeah, it looks the same, right? Yeah, that's what I've been doing, Dan. I haven't bought any of these. Energy's always been hard for me to buy, but I tell you, a lot of these names, they look so good. They look so good. This AR, I'll check OI. It might have been a call spread or a roll down, but this thing looks like it's going back to new highs. No, this AR. Yeah, I know, Oxy, right? Oh, how about this one? Wait, I didn't put it on the top. I thought I put this on the top bet list. Wait a second. Oh, I didn't post it. I got a new top bet list with the other names from the afternoon. This caught some action again. You know, these, if you want alpha, right? In other words, you want a big bang for your buck. If energy moves, like this is the type of name you buy. COP is, like LNG. These things are monsters. Tusk is more speculative. Look at that. So this is a cheaper price energy name. They bought some TEL today. That's more speculative. Oh, that's a 9 too. Give me a break. The TEL, we did okay in this run up here, we did okay here. But I haven't taken the dive at all. Energy's always been tough for me, I like this. Like this is something more my speed. You know why I don't like energy, guys? Because I feel like I'm playing crude no matter what. You know what I mean? Like I feel like I'm just playing crude. That's what it feels like to me. And I'm, that doesn't have to be a bad thing. Playing crude going into winter and hurricane season. But I'm just saying that's why I'm always reluctant to play. Yeah, it's like playing gold, but I mean, crude is better than gold, no? Solar is unbelievable. It's just too hot. Solar, I think, is a must watch on any dip, these things. On any dip. First Solar, what's the other monster? You guys know it. We talk about it every webinar. The solar play. ENPH. So there might be one little of like those quick shakeouts you might get, but there's some big money going into solar right now. Like, and off that bill, right? Is that what it is? Off that bill lately? CSIQ, that's another good name. Yeah. This is Chinese though, I think, right? Andrew? Isn't this Chinese? ENPH is a stud. Is a stud. This is just a stud. Oh, it's Canadian. ENPH is, a leader in the group. First Solar, Morgan Stanley upped it and raised their target in a big way today. But this is stretched here. We'll see how much of a dip you get, but that's what I would be looking for. CHPT, there's a lot of action in this thing. There's a lot of action in this thing. Charging, right, for EVs. But isn't this more hype than anything else? Like this is a SPAC, right? There's some real buying in it though, Yeah, I know it's a real company. I'm saying this was a SPAC. See, what I don't like is this, You guys know what I don't like. The hockey stick. There's the hockey stick. Like if this didn't happen, I like it a lot better. Yeah, you got a lot of sellers. You got a lot of sellers in this shit. Yeah, you could trade it, but yeah, this one has been doing well, right? JKS. Got to look to buy dips in this name, but this looks okay. 10? What do you mean 10? Get the fuck out of here. I didn't even look at it today. 10? Oh, what happened? Ryan Cohen sold? Oh my God. Are you kidding me? Life. Oh my God. The guy from Wall Street Bets was on CNBC telling everybody it's mooning, it's going to the moon. They're like, what price do you think it's going to? The moon. Oh my God. Yeah. Well, listen, we can day trade this until you turn purple in the face, just stick to your stops. But this is the last shit we want to buy in this mess. You know what I mean? Yeah, intraday, play it all you want, just be smart. But this is not what we're looking for, guys. This is not what we're looking for. Like I was saying yesterday, these are not leading the new bull market, right? If you have FOMO of missing out on a new bull market, that's what everybody fears, okay? This is not the stuff that's going to lead the way. And if we were to see a bull market, what happens is these things may pop at the start, but they all, go kick it in reverse. And the cream rises to the top. Weber, I know that was a big squeeze in that thing today. Weber. I don't even know this name. I've seen it a couple of times. These are all squeezes. Trade Alert had a whole write-up on it, right? Weber. I don't know what this thing is. Grills. What do you mean grills? What kind of grills? Cooking grills? Oh, God. Oh, Jesus. George Foreman grill? Oh, I remember this IPO, I think. Kramer had him on this thing. Don't ask me how I came in on that show. Yeah, there's a lot of shorts in all these things, right? That's why a short squeeze, you see these things squeezing. A lot of shorts. A lot of shorts. All right, but guys, this is this is possibly the start of what we're looking for in names, no matter what, right? No matter what type of market this turns into, we want to see this continue. Again, it's only been a little bit of time, couple days, earnings got in the way, a lot of it, but if we start seeing a top bet list daily looking like this, that would be ideal. That would be ideal, because again, you can play the market, but when the market gets stretched and you feel like the upside's limited, right, risk reward wise, you can look towards names. You can look towards names. But the big thing coming up here is Jackson Hole. And again, whatever Powell says, we want to see financial conditions just not tighten aggressively. That's the main thing. That's the main thing. I've been trading off this intraday. I don't know if you guys have been using it intraday much, but I've been trading primarily day trading intraday off this. So in other words, what I mean is when I look for long entries, I want to see I'm not gonna take a long into tightening conditions intraday. That's what I've been trying to stay away from. And it's been good to me. I probably just jinxed the shit out of it. But anyway. All right, guys. Yep. Everybody, Lourdes, have a good night. Dom, have a good night. Thanks for coming by, everybody. All right. Good luck the rest of the week. Members, Flow show tonight, Hartnett. Let's see what he has to say. Should be an interesting read. Have a good night, Dom. Be good, everybody.